Good morning, good morning, everyone. Hope you can hear me okay. So far, so good. What trades we've been doing is basically we're going on historical precedent. That's all we're doing. Are there divergences? Yeah, but like our video said last night, right now, somebody asked me, what do you think historically? And the thing is that it does matter, but there's another thing that matters even more. So let me show you what we're talking about. We like back testing. So back testing anybody can do. This is not something that you need like 44 years of experience and all that. And I'll show you what we're talking about. Here's NVIDIA on the left. Now, everybody and their mother was talking about if NVIDIA went down, would the SPX. And I disagreed, and I'll show you why. So here is NVIDIA. So as you see, it's down, and the SPX is up 23, trying to fill that gap, which is about doing. And so you might say, well, that's an anomaly. Well, not really. Not really. And let me show you what we're talking about. So we're going to go into here and we're going to use the rewind function on Thinkorswim. So we're going to go back to August 28th, the last earnings. So I'll show you what we're talking about. So there's NVIDIA rallying into earnings, sort of, in the S&P rally. Now watch what happens the next day. So you have NVIDIA is down. So it's down 1.4%. Well, it's actually more. It's pre-buffering. Watch this. It's down a lot. Down a lot. So it's pre-buffering. You see that? When I'm dual broadcast, it takes a while. There you go. It's down 8. Now, if you were trading the day before and I told you that NVIDIA would be down 8 and the S&P would be unchanged, I bet you thought, you would think I was crazy. Bet you thought I was totally crazy. Now watch what happens the next day. NVIDIA did nothing and the S&P went almost an all-time high. Look at that divergence. Yeah, I'm telling you, historical precedents make a difference. The other thing you're going to notice is in November, the markets are, markets are more likely to go up. So, and keep in mind, we've been long ACHR. We were long the warrants and ACHR at 40 cents. So that's a nice double. So pretty cool in there. So just keep in mind that we have a lot of these long ones too. In fact, we had a huge long list because this is the time of year they go up. But I just want to show you this. Yeah, that divergence, the S&P went up anyway. It's amazing on how that happens. So historical precedents do matter. As you see, NVIDIA down, S&P up. Yeah, just like August and just like the year before. In fact, if you want, we'll just go into on demand in November. So we'll go to the earnings a year before. So their earnings were on the 21st. Everybody said the same thing. If NVIDIA went down, the markets would go down. Well, let's go to the day after earnings. So the earnings were right here. They were on the 21st. There's a split, so it's a little funky to see in here. So there, NVIDIA was down a lot. So figure it was down like 4 points and the S&P went straight up. Like I said, it's not a coincidence. This happens all the time, especially in November. So you might say, well, how about the bond market? You keep talking about the bond market being weak. Well, if the bond market stops going down, it doesn't have to go up, but as long as it stops going down, then the S&P can go up because this time of year it goes up. So if you fast forward to now, the bonds look like dirt, but they're not they haven't had a new low. Do I think this is a danger sign? Darn right I do. Do I think it's a danger sign this second? No. I think it will A lot of times it starts going down December 1st, the SPX. So I just want you to know historical precedents do make a difference. Do make a difference. By the way, chart patterns mastery, we're still long Intel. We took our 4 points in Lilly and we're long Intel. So just to let you know, if you tuned in here, I haven't gotten out of Intel. So all we're doing in here is we're trying to take stocks, and I'll show you a scan for it, that have an oversold MACD and are over their 50 moving average. And in this market, these kind of turkeys go up. So just keep that in mind. These kind of turkeys go up. So I could get out soon. In fact, we probably should sell a half with the bonds on their low. In fact, chart patterns mastery, you might ask, well, how do you get out? Well, let's see. Where's the resistance? These is a real-time trade. There's your resistance, about 24.78. I'm not out yet. So even though the markets are starting to weaken, they should weaken a little with the bonds down like this. So not the Russell. The Russell historically goes up this time of year. It's not the Russell we're talking about. So just keep that in mind in there. In fact, I'm staying, when I watched the market sell off a bit, they went right to that gap. Yeah, we sell half Intel. Let me put that in here. There. Ooh, 54. So chart patterns mastery, let me go tune in and put that in there. Like I said, I can't triple broadcast. I'll screw up everything. But here we go. There. I just tuned into there for a second to post the exit. So when the Russell's going nuts like this, the cheaper stocks are going to stay up. So that's why you've seen NNOX go up. You've seen BLD go up. So I want to show you some scans. So that's number one, because this time of year, the Russell goes up. So let's show you. So all I'm doing in here is I'm trying to back test. You see that? You see that trend line? I only got out a half. I'm going to let the rest run. I'm going to try for at least 25 on the rest. Just keep that in mind. So number two, what you see at this time of year is the overbought ones have a habit of going down. The ones that are the leaders go down because people sell the leaders and they sell the losers, or they rotate into the losers and sell the winners. That's why we're short EAT. So just keep that in mind. We're short EAT, but we're long a lot of garbage. So let me show you on how I scan for garbage. There's two ways I do it to scan for garbage. So number one, now we can do a squeeze scan and all that. I don't want to get that crazy. I want to do something that's readily available and is not a proprietary scan. So you can have this in your hip pocket. Now keep in mind, all I'm doing in here is I'm finding cheaper stocks that have some open interest, like at least 2,000. Now you might ask why, and I'll show you why. NNOX. So you could buy the options. They trade a lot. So let's say you're bullish, you buy 3,000 shares. That's $18,000. If you buy 30 calls, it's $3,000. The same bang for your buck. Just keep that in mind, the same bang for your buck. But what happens if there's accounting fraud like you had with SMCI and it goes to zero? Yeah, you're 18,000 on the hook instead of 3,000. So that's why I'm looking for active options. Just keep that in mind. So you go back to this, and I'm not saying they're that active, but at least they have 2,000 open interest. I took average volume of 300,000. Now I usually take a 50 period, but 21 I'm going for this month so you can see them if they start to get some action. I'm going with a MACD fast length. The red line is under zero, but the moving average of the daily is it's over the 50. To me, over the 50 defines an uptrend or downtrend. Now, that's a point of contention. You could take a 20, you can take a lot of them, but that's the one I took. So when you do that, you'll see it's 108 stocks. That does not mean to buy them all whatsoever. Then you have to go through them. Now, when I've said earlier that it's a pain to go through them, just keep in mind, and here in the essentials, I can share this. You're paying for this. Stocks oversold in an uptrend. Now, keep in mind, once you save it, it becomes a watch list. But I'll just do it as 108 to show you. Now, what we're going to do in here is I want to show you which ones look better. What you really want is something that when it gets oversold has retained a bullish structure. So even though it's oversold, it looks like this and went to support. So a lot of them that look like that are oversold, unfortunately, had big old sell-offs like this. That's sloppy. Even though I think it could go up because we're in that where every small stock could go up. You just got to respect that it doesn't have as tight a pattern. So how about Expedia? There you go. And that has a tight pattern. So just keep that in mind, that kind of thing. Now, it doesn't mean other stocks won't go up, but I would rather find that kind of pattern. So once I showed you this, let me show you a couple ways to look at it. We're going to go to 108. Like I said, it's 108. That's a lot. So the first thing to do is theoretically, you can go through them pretty fast. Now, I put up here the news also. So I have it linked 5 and 5, like the purple. You know, you could call it fuchsia or whatever it is. The key is in here, why did this go down? Went down because Trump won and people are perceiving, and I'm not saying it's right or wrong, traders are perceiving medical stocks are going to have a tough time in the new administration. So I'm not sure if you're going to believe that or not, because what happens is some of them are like, what the hell are you talking about? They're still a good stock. So what happened? It got oversold in an uptrend and went nuts. I'm not in it. Now, why aren't I in that? Because you might say, well, there you go. Well, number one, it had an ugly reversal candle after earnings. I don't like big reversal candles. Number two, the CEO and the COO left the day before earnings. That always gets me nervous. So that's why I look at news also. So just keep that in mind. So getting back to it though, if you go through these, you'll see a lot of them are therapeutic stocks. Now, the problem with the therapeutic stocks, if there is harsher scrutiny, a lot of these don't have any money. So they need to raise money. So they just go down faster. That's why I'd rather something that isn't in that group if you can find them. So I'm just telling you, that's how we do it. And like I said, the reason that I look for optionable ones is, let's say I wanted to buy that. Yeah, what do you see? It's a pharmaceutical. And the other thing, do not believe when you go to news, H.C. Wainwright. They always have unrealistic targets. They have a 16 target. And I'm telling you, if you go to tip ranks and go to the analysts, so you can go to that, and then you go to a free site called Tip Ranks, you'll see most of the analysts with this company are like not rated very well. I'll show you. We'll go to one. Now, this is all free. So you're getting the news free. Just keep that in mind. That's number one. You're getting the news free. Number two, you could go to Tip Ranks. So Tip Ranks is free. And you go into here and go to Vincent. Sorry if you're on the site. Let me get his name right. Vernon, sorry. There, check out what his recommendations are. So he's got an average return of 5%. He's only right 1 out of 4 times. But look, they're not telling me what stocks, but look at the upside. 2,000 upside, 700% upside. This is a little unrealistic. So just keep that in mind in here. I always look at Tip Ranks. So I'm not going to believe that stuff. Don't buy something just because somebody recommends it. But if I was going to buy, I'm not going to buy it. But if I was, you got to do it with options. You got to do it with options. So let me show you on how I try to value the options. So what I do in here is if it shows a wide spread, just understand I was a market maker for years on the CBOE. Take the puts. That's all you do is take the puts. So I'm not saying I'm buying anything, all right? But you see the market's really wide. The stock is only 4 cents. Take the midpoint of the puts. That's 10 cents. And add that to the intrinsic. So it's whatever the price minus 2.5. So let's round it off to $1.40. So $1.40 plus 10 cents. You're going to have to pay $1.50 to buy these calls. You'll probably get filled. You don't buy them at the market. But I'm just telling you, always watch the puts. That's how you value them. So even if it's a wide market, they'll fill you at fair value or close to it. So let me just tell you on how I see what they do. Let's say that you buy these at $1.50. Well, what they're doing is shorting the stock here. They're locking in at least a penny, but they might do it 1,000 times. So just keep that in mind that they're trying to have a tiny edge. You're always looking for the edge. So in there. So if you buy a call here, they have to buy the stock. It's the edge. So they buy the stock, they sell the calls and lock in a certain amount of money. So just keep that in mind on how they do it. So you go through all of these. So I'll show you. We'll just go through them. Like pets. Pets looked okay, but like I said, look at the difference between pets on the left and Intel on the right. We'll take them both on a daily chart. Now, on the bottom, I use the MACD. I use a 3, 10, 16. You can use simple, exponential. They all look about the same. The whole point is if you bought when they were overbought, you could use a RSI, a stochastic, then the probability is you're going to not make money. If you buy it when it consolidates after it oversold, you have more of the odds in your favor. The other is look at the structure of this on the left when it got overbought and this on the right. I don't know about you, but the structure, the one on the right looks better. So that's how I try to evaluate these. So like I said, we sold half of Intel. Now you might be like, why'd you sell half if you think it could go to 25? You sell half because it's money management. This way, if it goes back to where we entered the order, you're playing with the house money. So you just made 45 cents on half. So that's what we did. But if you go through these, you're going to see a couple of things. Number one, do you want to buy something that hardly has movement? No. Number two, do you want to buy something that's up against massive resistance? No. And do you want to buy something that has earnings? Well, you want them already to have earnings. Now, I have no idea what this company does. This is why, but I like seeing a longer term chart. Yeah, maybe it goes up later, but I don't, I got to research it more. But I like having weekly and daily at the minimum. At the minimum. So when some's $1.75 and goes to 5, I get a little nervous screwing around with it. So I just keep that in mind. But let's just go, and I'm just going to show you some. There's Vanda, and another pharmaceutical that got nailed and hasn't bounced. So you got IBRX had some like dubious news. And you can just go through them all. Now, keep in mind another thing. When I trade, let's say, pharmaceutical stocks, you have to have the expensive go up for the cheapies to go up. The reason being, the theory is if a Regeneron goes up, a lot of times people take profits in those and roll them into the cheapies. What do you notice in Regeneron? It's still plummeting. So the probability is the cheaper ones are not going to have that massive move on the upside you're expecting. So always look at the expensive. So let me show you another way to do this. So now let me tell you another thing. I'm talking about historically markets go up at this time of year. Yeah, that's fine. But when the bond market is this weak, the markets don't go up as much as you think. Just keep that in the back of your mind. So getting back to it though, let's say you're watching the drug stocks and and you have an opinion. Opinions are always a bad thing. But you're like, I think they're overreacting. Well, the first place you're going to see them if they're overreacting is in the big stocks. So if you don't see the big stocks going up, so we'll just take, I'm going to FinViz. I haven't even logged in. Tip ranks, I hadn't even logged in. These are some free sites that are real handy. So what you do in there is you go to overview. It's only 107. Well, I want to take not over the 50. There. Everyone is 500. 500. And I'm taking the ones that have average volume at 300,000. Then what I'm doing is I'm going to the most expensive. And what do you notice? Yeah, McKesson different. But this is healthcare plans. That's different. But look at some of the other ones, just absolutely plummeting. Now, why isn't Intuitive Surgical plummeting? Because it's medical instruments and supplies. It's not vaccines. It's not biotech. So darn right, I'm going to look for stocks within that group. Maybe they got thrown out with everything else, but look at all the expensive ones. So all of them getting the hit. Stryker. Yeah, I was just in the hospital. Everything's a Stryker. You know, the hospital beds, everything. So Stryker's holding up. Intuitive Surgical's holding up. You know, so just keep that in mind that the expensive ones, if they're in the biotech and they're staying down, then probably the cheap ones are not going to rally. Like if Amgen's going down, then VIR probably isn't going to go up. So just keep that in mind. It's a free site. I'm just taking all the healthcare. Now, here's another scan for you. Forget about healthcare. Let's just take medical equipment now that we saw ISRG's up. There's only 27. I think everybody can look at 27 stocks. And I bet you're going to find some good ones in here. Align Technology, trying to form a bottom. Look at that. That's not a plummet. That is a plummet. That's a plummet. So I'm looking for the ones that are acting relatively good. I'm not going to buy the ones on the way down. maybe Baxter, but that doesn't move a lot. They don't look so hot either. You had all of two that look good. So if only two look good, I'm not going to go buy a thing. So let's take medical devices. Maybe that's different. Yeah, those look better. You're seeing Massey go up. So you see PRCT near highs. So maybe the cheapies can go up if the big ones go up. It's just a creative way of doing it. So just keep that in mind. That's how I do it. So remember, cheap ones at this time of year usually go up. They have a habit of going up. Now, keep in mind, they're cheap for a reason. You should be in them and then out of them. But they could have a measuring objective. So just keep that in mind. And that's why we're in this. NNOX. Now, I'll show you two reasons we're in this. Number one, we sold half last night at 610. It's 590. So we bought it. Our average cost is 590. We sold half at 610 before earnings. Earnings were this morning. So now our average cost is lower. So because we sold half. Now, why would I even buy this? I'll give you two reasons. Number one, well, three reasons. Number one, it's into X-ray AI. So there's your AI. So what are AI stocks doing? They're going nuts. Yeah, I'm picking the right group. SoundHound is even AI. Even that dog's going up. So if those are going up, and we already made our money in BBAI, and unfortunately I got out. So we bought a bunch of calls down here. We sold them here. Yeah, too early. I saw it yesterday. I didn't get back in. But AI is going nuts. And NOX is in that group. So number one, it's in the AI group. Number two, it held support. Number three, and don't laugh at this, but a lot of people thinking that Trump is going to help the Israel, the Mideast situation. If you go and put in Israel stocks, you'll see they started outperforming when Trump got elected. You don't have to agree with me. I'm just going on perception. Just going on perception. So just keep that in mind. That's the way I'm looking at it. So you have AI, you have support, you have that it's in a medical device, and it's in a country where perception is better than it was. Doesn't mean it's perfect, but perception means everything to traders. Look at this. This is Israeli stocks. Look how they've rallied. Wow. Not everyone, but a lot of them have had massive rallies. So just keep that in mind in here. So we try to have three reasons to do a trade. So that's how we're doing it. And I'll show you another thing. We're talking about oversold and uptrend. I just told everybody on the Chart Patterns Mastery that we should look at NNE because it was oversold in an uptrend. See that? Got to the zero line. And it just took off this morning. Took off. So what happened? They appointed somebody that's like used to be Secretary of the Defense to run it. Yeah, so that worked. But if that goes up, then everybody's looking at companion stock. So UEC went up, SMR went up. So if you're in here, Chart Patterns Mastery, we talked about buying this. Of this, don't buy when it's too far from the 20. But if you want to buy when it kisses the 20, that's fine. And that's exactly what happened. So it went and kissed the 20 and then took off. Very exciting. So if you were in that, and I'll show you what we're talking about. We're going to go into here, and I want to show you what we're talking about. We're going to take in SMR again. So if you're in here, I hope you bought it. We talked about buying it. A lot of times these stocks, these crazy stocks, you don't buy them when they're this far from the 20. See that? You don't have to use the 20 as support, but you can use the 20 that if it's too far away, you don't want to initiate at the wrong prices. So when it sold off today and yesterday to the 50 moving average, then you look for an ultra short-term trigger. There's your ultra short-term trigger. In fact, it was even back here. There. Bull flag. Nah, I don't know about that bull flag, but any of these. The whole point is you don't want to buy them when they're too extended from the 20. Yeah, I got too extended from the 20. It went back to the 20. And then at that level, you look for a reversal pattern. There was your reversal pattern. It's amazing on how that works. So I just want to show you that. So that's a cool group for you. Also, if one of them is going nuts, we just talked about if drug stocks went down, then the cheapies aren't going to go up. We'll go put NNE in here. That's hard because it's really nuclear. They're calling them special industrial machinery. So if one of them goes nuts, guess what? The rest of them can go nuts. Now, I know Illinois Tool Works is a lot different than a nuclear power one. But as you see, they went up, and I bet the cheapies went up. Yeah, look at that. Bless its heart. Isn't that amazing? It's just amazing how that works. So if the cheap one, expensive ones go up, these are more likely to go up. So now there's another. I have all these like things of different information. So I'll show you another thing really cool. And that's companion stocks. This is a thing called Know the Float. See, Know the Float? So you go into there, and we talked about Bloom Energy. I hate to see where that is. I totally forgot about that stock. Yeah, there you go. Another one that got too far from the 20 and tried to consolidate. But let's go back to it. So we're going to put in here NNE. And look at the bottom. Similar stocks. Isn't that amazing? There's your similar stocks. Really cool stuff, I think. So you could put in here similar stocks to SMR. Nah, I wouldn't put Federal Express, but New Scale Power, put in other ones like that, and you'll see it's really cool to watch that with this. Now, there's another one. Now, I have a lot of them. Market. In fact, let me share this with you. It's called Know the Float. I mean, we found a lot of great ideas this way. All right, here's another one, Market Chameleon. You go to Market Chameleon, you put in the stock you want. Let's say NNE. They have a thing called R squared. R squared is the correlation coefficient. So you go over here on the left, stock info, fundamentals, and you go down here to company info, and you go to similar stocks. And it'll tell you which correlate the most. There. What correlates the most with NNE? New Scale Power. American Semiconductor. Isn't that amazing? So when NNE went up, did AMSC go up? And they don't always go up exactly at the perfect time. Yeah, it sure did, didn't it? And I'm telling you, I bet NNE led. Yeah, NNE was already way up here when this was forming a bull flag. Pretty cool. So now you have a lot of combinations of ways to find companion stocks. And I hope that helps you. Now I have another one. This is an opposite. You know, I like to find short ideas. So we talked about the rotation out of the eats of the world, overbought stock. What correlates with eat? Well, the problem is, you know, they own Olive Garden. That might be different than Yum Brands. But still, if the other ones are doing this, this is more likely that a bearish chart is going to work. Now, it didn't work with Target and Walmart. That's because Walmart is eating Target's lunch. So I've seen more people do pairs trades like that and lose their butt. You have to look at the perspective, or no pun intended, with eating somebody's lunch. Sorry about that. So let's go into here. Let's go back in what I was showing you. Go to Market Chameleon. So if I see, let's say, 6 stocks in the restaurant arena going down, then it's more likely that EAT is going to go down, especially at this time of year where they rotate out of the leaders. So what's the highest R squared? Cheesecake Factory, Texas Roadhouse, BJ's Restaurants, Darden. You can put all these in here. In fact, you could see from a 1-month return, EAT has done great. For a month, it's done great. But look at the return of most of these. They're awful. You know, cheesecake's up all of 8%. So let's put the cake up here. There. As you see, it hasn't been the same. How about Yum? I know that hasn't been the same. How about Darden? Hasn't been the same. So how about Texas Roadhouse? Hasn't been the same. What I mean by that is they're not even close to their all-time highs, while EAT's all the way up here. So just keep that in mind in here of the divergence. So that doesn't mean this is going down, but it means that if it forms a bearish pattern, it's more likely to go down. So I'm really into companion stocks. I just want to make that clear. Now, here's another interesting thing. These kind of stocks, the plug powers, are they going to start going up? Are they going to start going up because the nuclear stocks are going up? Yeah, that's always an interesting thing for you. So just keep that in mind. So very interesting. I'm not going near plug power. When I watch a stock work off its overbought by gapping down, I don't trust it. I want it to be more gradual like that. See, overbought, gradual. Overbought, gap down. So I take this off my screen. So I just want you to know there's a time and a place to play these things on the upside. Not that. You got to be picky. That's why I showed you a scan, and then you have to go through every one, whether you like it or not. But that's what I do for you in the background. Hey, I don't know what to tell you in there. Nah, at least it's oversold at support. That's a network stock. It doesn't move a lot. That's all of 50 cents. So, but this is what I do in the background. So I'll go through them and try to find the ones that look like they could have a lot of room to move. And they didn't have a big gap down. That looks ugly. There, this is gradual. That's what you're looking for. Gradual. So, that's how we build a watch list. So when we go to our November 6th, we built one a while ago. So you see, we built it, but we didn't buy them when they were overbought. You want to see how they work off their overbought. That got taken over. When you see it up like that and then futz around, it got taken over. See, like GT. Yeah, that looks like it's consolidating. But if you're right, what are you going to make? 30 cents. It's just not worth it. Not worth it. So keep that in mind. And we'll just go through them all. I've been building a watch list almost every day for everyone. I want a type pattern like that. Amazon, when you got the thing about Google having to divest of Google Chrome, all of a sudden, what are you seeing? And I got to tell you, this is another thing you got to do. When Bloomberg had a headline of hardliner, you don't have to believe they're hardliner. You don't have to believe anything Bloomberg says. But just keep in mind, Trump equals hardliner. That headline triggers algorithms. When the algorithm saw hardliner, they sold off biotech, they sold off China, and they sold off solar. Don't laugh. People key at that. Their algorithms rule. So you got to try to get in the head of the algorithms. So when you saw hardliner, you saw what happened. RFK Jr. getting in. Vaccine stocks went down. So you just got to get in the head of all this. So just keep in mind about all this. If you see something with AI, yeah, they probably buy the AI stocks. You see something with nuclear, pro-nuclear, you buy the nuclear stocks. That kind of stuff can really work. So just, definitely keep that in mind. And you'll see it. There's positives and negatives. So, you see about intercontinental ballistic missile. Yep, and the Lockheed Martins go up. So a lot of headlines trigger. Yeah, so you got to know the headlines. We go over those before the opening, but they can trigger algorithmic trading. So just keep that in mind. That's the way at least I look at it. But so that's what I do. Try to see the headlines, try to see companion stocks, try to look at the whole market as a big picture. So we have a number of ways of looking at stuff. And so far it's worked. Now, don't laugh. I didn't understand this one, Lilly. Because on the one hand, you're like medical stock, you got to, they're going to kill it, which they did. So they killed it. But if you look within the news, RFK Jr., I mean, Dr. Oz got, nominated for Medicare stuff. Just keep in mind that he's a real proponent of Ozempic. And just keep in mind what happened when he got nominated. Look at the right. It went up $24. So we bought Lilly today and scalped a quick 3.5 points. But I'm telling you, news in the political environment can matter. So this should not have gone down that much with that nomination. So just wanted to let you know that. So definitely watch headlines. Net, we were in it, we're not in it anymore. And I'm telling you, when you see net go up, it seemed logical. I'm not in front on the chart patterns mastery right now, but it sure seemed logical that PANW should go up later after earnings. So it didn't at first. It disappointed people. It went up at first, sorry, but then it formed this. So somebody asked me a really great question in the chart patterns mastery room. Do you always have as your 3 reasons, one of them charts? Yep. So when I saw this turn, then I'm bullish. I don't like chasing extreme strength. So, but there's your chart pattern. So you had the test, you had the security group was going nuts, and you had this starting to turn. There's 3 reasons for you. So just keep that in mind. Hey, non-emotional trader, how are you doing? Hope you're doing well. You've had a lot of great trades. So just to let you know, there are a lot of people that post hindsight stuff. You're not one of them. I'm telling you, you and Shepard, you guys have shown, and No FOMO have shown great trades. So let's go back to those AI stocks. I have a big list. Funny you mentioned that. My big list of AI stocks. We miss CRNC. So good one. Well, you have some big size going. Good job. But Soundhound was one of them. CRNC, VERI, BBAI. We were in that. We're out of it. So in this type of environment, these can go up more than you ever imagine, as you know. So good trade. And non-emotional trader, like I said, I really appreciate you sharing those ideas. That's what the chat's all about. I can show you 8 million things, but a lot of the subscribers like you show me great trades. So, it goes both ways. All the ideas. Like this, I forgot this today. We were watching NNE go nuts. And I forgot about, I still forgot the name of it, but it's not OLO. What's the name of it? OL. Well, OLO is one of them, but it's the other one. So yeah, I could put the low at the top, sure. But what's the other one? Low, we have a list of them. But let me show you this. Yeah, here's your huge watch list, but it's not perfect. I did this a while ago. That's a more recent one of just these. But if you want the big ones, the big, this is a gigantic list and it's not perfect. There's that. Because some of them might, like this has 3,000 volume. OKLO, that's the one. So I'm just telling you, we were talking about companion stocks. Thank you, SS. And you see that NNE this morning is doing that. I mean, I'm talking about 1 minute chart. And you have more than enough chance in this. And I forgot about it. We were doing other stocks. So this was actually down when NNE was going nuts. Amazing. So I'm just telling you, these stocks can still have more moves. They're extended now, but we'll trade them again later. So next thing, do you want me to share that list? Here you go. I'll just do an image for you. So there's an AI list. Now it's not perfect. I have CrowdStrike in there. You can put PNW, maybe. You can put SoundHound like I have. You can put BBAI. I would just put anything that has an AI in it. And like I said, this is an imperfect list. So just keep that in mind. But here you go. Now, this is totally opposite the therapeutic stocks. If the big ones are going bonkers, then probably there's a good probability the cheap ones are going to go up, like BBAI. And you're seeing it right in front of your eyes. 10 million shares. So here, let me share this. This is an imperfect list. There. Now, there's an imperfect list for you. But I'm just telling you, if you see something have this pattern, this is why we were in it. We got out too early. We're in other ones, though. But I'm just telling you, if that's going up, then, and this is going up, then why shouldn't the rest go up? I know that sounds like just simplistic, but I'm a simplistic kind of person. That just looks awful. So I don't even know what they do. Even this one, WTAI, I've never even heard of it. So just keep that in mind. Now, you mentioned ACHR. What else is in the same group? Now, we were in the ACHR warrants. We got out too early. Got out way too early. ACHR warrants. They're $1. We were in them at 40 cents. I'm telling you, we're in that kind of environment where these suckers can go up. So I got another one. If ACHR, which is into that aviation thing, is made a new high, well, what else could make a high? How about BLDE, Blade? It's acted like dirt, but it's starting to get its footing. Blade Aviation. Why shouldn't that go back to 4? So just keep this in the back of your mind, these kind of things. Let's look at Digley. We used to call it Digley. I don't really like Digley. But yeah, same kind of thing in this environment. There's another one. I like that one better, but I liked it on that. I like the bull flag after the scallop pattern. But you're right, in this market, they can go up higher than you ever imagine. No doubt. Yeah, but I'll tell you, in this environment, the political environment, you could get a good move in Blade because the rest of the group is going up. Now, the problem with this stock, it never had that good a pattern. It's one of those things you're going to get annoyed of me saying it's a better buy at 4. We're already in it, but I just want you to know what we're looking at. So I know I have to go in a second, but I would go through a different thing. And I know you're doing this, non-emotional trader. I would just go through FinViz. Yeah, thanks, Jovian in the YouTube room. Yeah, OKLO. We're in a time that anything that is AI or nuclear, or probably like an Herbalife, a dog, low float, like Kodak, they're just, they're having their moments. So I would just go over FinViz and go over everything that has low float. We're just in that environment. Now, I'll tell you right now, don't laugh, non-emotional trader. It used to be a stock called TA that got bought out, but every time the TA would have a spike would be the top of the market. Well, the new one is Ballard Power. If you see Ballard Power have a massive spike, that usually shows the high of the market. I know that sounds crazy, but it works. So how about Buru? I've never even, oh, that's Subaru. I don't like buying, oh, Nubaru. I have no idea what they do. I will tell you that if they have a float of 50 million, you don't do it. There, 16 million, not bad. That's right up your alley. So definitely watch all these. It's a fun time to trade the small ones. So definitely the small time, a good time to trade them. Now I do another. All the ones you're talking about. So you're talking about OKLO. Going nuts. It's got a lot of float, but it's got a lot of short float. That's the other thing. Be careful with these. You want to buy them on the way up. That's when you get a short squeeze. You don't get a short squeeze on the way down. So here's another one. I'll tell you real quick. We got all of 1 minute left. Just go and take every stock on the planet and take the ones that have a short float of at least 10%, maybe 15%. But I'm telling you, the ones that are going to move are going to be the ones that are already in an uptrend, because they're the ones that shorts get scared in. So you can take technical over the 50, and I bet you're going to see a tremendous amount of outperformers. There's one there. Well, we're in that. We were in it. There are going to be more of them. So I would take the short float ones and then look for non-therapeutic. Just keep that in mind. Here's one for you. That's right up your alley, non-emotional trader. Except it had a reverse split. I never touch a stock that had a reverse split. So take care, everybody. I hope this was enlightening, and I'll talk to you later.